Hello, uptrend line swing trading strategy. How to plan swing trade entries and exits. We are going to use few stocks on our watch list to do that together by analyzing them. So the first one is MMC. MMC, and we are using maximum daily chart to do our chart analysis, and the platform is Think of Swim platform. So MMC, our entry point is the line that we color on purple, and at this point, this line, we could actually turn it into the default color because we will not want to buy that high with long uptrend line swing trading strategy that we are using. So right now the price is at this level, and yesterday, September 15, 2025, the price went down. A red highlighted price means the price at the end of the day was lower than the price in the morning, so the bar will be red. MMC, we purchased it in 2024 using short uptrend and swing trading strategy, and in 2025 we decided to use long uptrend and swing trading strategy. But when we bought it at this line, which is our entry point, because we assume this could be a good value line. Is a long line, cross multiple years. That's the baseline of our strategy, long uptrend and swing trading strategy. You trace your support lines passing by the valley of the mountains, and the lines that cross multiple years, we assume it will touch base with that line again if the line passed by multiple higher lows. So it touch base with it. When it start going up, we purchase it there. This low is higher than this low, which is higher than this low, which is higher than this one, and we purchase it at the green bar that followed that pullback, or it end up becoming red by the end of the day, which can happen as well. But so we purchase it and we waited until it reached a new high. So this will be the new high. It's higher than the others, and being maximum daily cap, that's historical high we are using. So that was our exit point, the next new high. So we exited. We know when we reach a new high, it will pull back a little bit, start building the upside wall of the mountain. So we exited, and when it pulled back to rest on this mountain, we bought it again. And when it went back up, reached another new high, we sold it. And not knowing if this purchase was a good one, because it touched base with the line here and has been up ever since. So we don't know if it's done going up, we will start going down. Assuming this may not be low enough to be the valley of the mountain, we just decided to exit, which was a good thing because after that it started going down. So right now it is quite low. This is the next line that we trace that we could buy at, or this one. That's why I took this out of there, because it's the upside wall of the mountain. Now that it touched base with this, that buying it here could be a short uptrend and swing trading strategy, Otherwise, it could be a risky move. It's just so high. So for the long uptrend swing strategy, we might prefer to buy at the value line, which is the entry point, and sell it at the exit, which will be the new high, the next new high. So now it is there, but it does not give us a confirmation that it's not going down yet. So we are just going to keep observing it, because when it's going down, it's going to be making lower lows. So you see the red bar are the lows. So we will be seeing that this is lower, for instance, to this one, for instance, or this is lower than this red, for instance. But then we have higher lows here until it reach this support line, and then it pull back again. So I had to say it's getting ready to start going up again. Is resting around the support line and getting ready to start going up. So we mark a red on our sheet, because once we get the confirmation that it's done going down and we start going up, we can buy some share. So we are going to be observing it to see if it start making higher lows here. Right now we have two. This one is a little bit lower than this one. So, and the lows, you'll be comparing them. You'll be comparing the ones that have green between them. So because you'll have some that are like this, you'll be comparing, for instance, this one to that one, because it pulled back, and then we have a green bar there, and then it pull back. So I like to compare the lows, or you'll compare this one to this one, because you have a green bar between it, and then you'll compare this one to this one, and you'll notice that you have lower lows there, but here we have higher lows, because this one is higher than this one, is higher than this one, is higher than this one, and then we have lower lows that follow it here as well. So we'll want it to start seeing higher lows here, and we can buy at the first or second green bar that will follow a higher low. So it's mark red on our list for the time being. So the next one is MRVL. We highlighted because we purchased it already. So now we explain how we determine our entry point and our exit point. With our long uptrend and swing trading strategy, we use the value line of the mountain as our entry point, and buy when we start seeing higher lows around, like a few higher lows around that line that we targeted, and we start thinking about selling it once it reach a new high. We'll compare how it behaved previously at that new high to see if it's going to continue going up or if it's going to drop, to decide if we want to stay longer in the trade or exit it. And to buy as well at the support line, we will compare how it behaved previously around that line to see if it lingered there for a while, or once it touched base with it start going up from there. So those are the analysis we do by comparing what is going on to the past to see if there is a pattern that is repeating itself or might repeat itself. So MRVL, so we have those two lines that we trace to purchase it at. So when it reach this one, and we can see that it does a tall mountain. So the previous new high was there, and then it pulled back, and it reached a new high around here, went up, and just dropped from there. So it does not make a lot of higher high from that point on when it reached a new high, I would think. So it just did it for a while here and then decided to go down. So when it reached this, we thought maybe it might be the value line there. When it started going up, we bought it, but then it pulled back to this second line here, went up a little bit and dropped again. So it's lingered around that area a little bit before going up. So because we bought it there, but then it touched base with here, didn't linger there though, but we are trapped in the trade because right now we might maybe be making a few dollar profit or few dollar loss at this point where we bought it. The price is on the y-axis and the date is on the x-axis. But yeah, so for a while we are positive in it, and then it fell back. We have a gap down there. But yeah, so we don't like to stay at a loss, and that's why we like to see if we have a confirmation that is down, going down, before we buy. But again, you can do that, but it's still going to turn around and move down. So, and it just allow us to understand the pattern of the stocks. That's why we just prefer to have a watch list of our stock to trade from. That way we will familiarize ourselves with the stocks by trading it over and over and over. Yesterday the price went down. And by the way, so let's say you wanted to buy these stocks, for instance, it's not too far from the lowest value line, and we can look at it. It start making some higher lows here. If today is a green bar, it could be a buy there as well, an entry point if you want to buy this based on my assumption. And it will have a green bar. If you have a green bar there, this low is higher than that one, that little one there, and is higher than this. So yeah, we have a little bit of higher lows there. If let's assume we wanted to buy this stock, today is a green bar, it will be a day to buy. But it does not mean it may not turn around and come back here, though it can. But the thing is now there is not a much gap there, so you'll get trapped in it until they start getting ready to go up. But I don't think it will be a problem much. You see, the price we bought it is kind of close to the price it's selling now, so we could be few dollar negative or few dollar positive in it after we were positive for a while here. But we didn't sell it because again it was our entry point. Our exit point is going to be the next new high, which can take a while. So the next one we are going to analyze, and that'll be in fact those are the two that we are going to analyze in this video. So yeah, and that is pretty much the strategy we use, long up to long swing trading strategy, and that's how we plan our entries and exits. So thank you so much for your time. And if you are a beginner swing trader or you are thinking about swing trading, I will suggest you start small, one share at a time. And for this stock, for instance, selling for $67 a share with $100, you can buy one share. And with this strategy, for instance, assuming you bought it around $67, and the next new high will be higher than 127 here, before you will see that mark as a new high. The price will be more than 127.48. So let's say you sell it for 128, you'll see the difference in profit there. So let's say 128 minus $68, you'll have $60 profit per share. And after you pay brokerage fee and all those, you'll have some left. So I will just suggest you you start small, one share at a time, and as you are comparing the strategy you are using, customizing it to meet your risk tolerance, your personality type, and selecting stocks to make up your watch list, and see if they are comparable with the strategy you are using. Otherwise, take some out, try new ones until you have a list of stocks that are well comparable with the strategy you are using. And from that point, to increase your profits, you just buy more share. You don't change the strategy. You don't become more risky. You just increase the number of shares you buy. If one share of that a particular stock give you $1 profit, you just know that to make $2 profit, you just buy 2 shares. So you start small. Whatever the price, the minimum price to buy 1 share, you just start small. And once you are comfortable with the strategy and the stocks you are trading to increase your profit, you just increase the number of shares you are purchasing. That is the strategy that I'm using, and that is what I'm recommending. But it's not just the only way or the best way necessarily to trade or to swing trade. But I just like to find a strategy that is repeatable, that I can make a formula out of, that I know that is sustainable, and just go from there. And when you are in charge of your household, you have a job, you have a family to take care of, you have responsibilities, you may not have a lot of time to dedicate for trading. So I found Uptrend swing trading strategy to be a strategy for me personally, in the sense that you are not going to buy stocks every day, and you are not going to be selling stocks every day. You see, we bought it in March, and we are in September. Today is September 16, and we are analyzing the stocks after the market closed on September 15, and before they open again today. So you can see for how long we have been in this trade, and we are nowhere near to sell it yet. So thank you so much for your time. We thank you very much for all your comments, and we thank you very much you all that subscribe to our channel. Thank you for watching our videos. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C YouTube channel, and ninassoap.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. Just start small and grow your account from there. Thank you. That way you know that beside your job, you have other streams of income, you have other options, and you use a portion of your paycheck to fund your account to trade. So you put the money you are spending your time to earn, you put a portion of it to make more money, to put to work. Thank you.